Kia ora, good morning. It is Tuesday. I am Mike from Markets, and I'm now in my 40s. Yeah, I also sound worse than I actually am. Just losing my voice thing. Anyway, Kiwibank Markets in a minute. Yeah, I've had a couple of days away, so yeah, we'll see how we go. Might be a little rusty. Anyway, risk off was the central theme of the evening session, rather than US-China trade wars or Brexit or someone somewhere revising down growth projections. The key drivers of negative sentiment overnight were the ongoing tensions, protests in Hong Kong, and political disruptions in Argentina. Yeah, trade war, Brexit, revised growth, that stuff and more is still going on. It just wasn't front and center overnight. Yeah, so the quick and dirty, flights in and out of Hong Kong were cancelled yesterday afternoon. Protesters have occupied the airport for a fourth consecutive day, and there were reports of some riot police physically subduing crowds, and some protesters using petrol bombs. Maybe those reports are inaccurate, maybe not. Yeah. Over in Argentina, they have a presidential election later this year, and a precursor election saw a big swing away from the market-friendly incumbent toward the market-unfriendly challenger. Yeah, so by market-unfriendly, we're talking potential for capital controls, currency controls, that thing where the state assumes control of private business, nationalisation. Yeah, 30-something Mike wouldn't have had to think about that. He just would have known it. Anyway, these things, some or all, may not pan out, but markets trade on expectation, and that expectation saw the value of the Argentine peso fall by almost a third. It would be like the Kiwi falling from the mid-64s to the mid-42s. Yeah. Anyway, why should we care about Hong Kong and Argentina? Basically, everything's connected. And these events they're more straws lumped on the back of the global markets risk camel. Yeah. So the risk-off theme that played out in equities, bonds, and currencies falls across the board in the major stock indices of Europe and the US. US 10-year Treasury yields, they hit a new lowest level since 2016, 1.64%. And the yen, that outperformed, while the Kiwi and the Aussie struggled. The Kiwi, it is at the lower end of its recent trading range, 64.4 US cents. That looks increasingly like a decent support level, but downside risks are continuing to mount, like all that stuff I just talked about. Yeah, okay, that is enough from me because my voice is going, so have a great Tuesday. Kia pai tō rā.